Hey guys, Elvis here from Level 2 Trading. Alright, we're gonna go through two different videos this evening. Alright, the first video, which is this video, would be how to clean up our chart and implement the charting system that we should be using. So, need to first go to our charting system, have the 15-minute or the 5-minute chart up. I usually use the 15-minute when I doing changes to the charter system. The update was from they updated this last week, so that brought in a couple new tools and changed up some stuff. We did a preliminary setup last night for run. Alright, this is the setup we'll be using from now on until we change on anything. So you go to brackets settings, gear icon settings, brackets on, name your bracket name, showing currency, take profit and stop loss. Take profit level should be set at 400, which is 8 points. So we're looking at volatility. If you want, you could use 350 or 300 if you're looking for one-to-one trades. I'll show you why after. Stop loss minus 300, which is 6 points. Stop type is not a trailing stop, it would be stop in this case. So save that. Alright, so you go to the top of the chart, gear icon, click on gear icon, stop type. Alright, so this is where you're setting your trailing stop limit, not trailing stop. It's a trailing stop limit. Alright, so we're using the limit distance from the stop at minus 62.5. I will give you the reason for that in a couple seconds, which is you have to select currency, not ticks, not price, currency, and you click up or down 62.5. Alright, now for the reason for setting up the trade like this is because of our deviation and what is the expected move for the day. So like the move for tomorrow is 28.25 points, which is full range of the expected move. So if you want to calculate that, so we only look for 25% of that, so 28.225 over 4. So when you're looking for 25% of the market, we could be looking for quick trades and position at the right point. That would leave us with 7 points. So now 7.0625 points. So now we're using a hard stop, which would say if we enter 2045, our hard stop would be 2039. Right, now the trailing stop would enter at 2037.2.75. Sorry, calculating in my brain. Right, so your trailing stop would be 2637.25. Now how the trailing stop will be working, that trailing stop works is for every tick up it would move up a tick. So if you clear 1.25 and as we will see one strike beyond the 7, it would be your entry. So you would have a hard stop, so you have less money at risk initially in case it breaks through and flow down against you, and as a soft stop which would be taken out if the hard stop is filled in the initial position, if it don't move in your way, in your direction. So if you buy in, if it doesn't move and it comes straight down and like punch this evening, you would see that hard stop hit, and with the soft stop it would be like that. So for every tick with the soft stop, which is the trailing stop limit, it moves in your direction. So for why we're using it is to actually build a little bit of width in the market and reduce our risk once we in a trade. So meaning that if we in a trade like today's trade, we enter at 26.58, we got filled, the market moved up dragged our trailing stop up and then punched down and took us out. So, and we got kind of taken out by point 625, well, $62.50, which is 3 ticks, 0.75 points, which is less than 1 point. So that could be cleaned up a little bit, and we take profits set on our trailing stop. So even though we would have gotten stopped out, we would have gotten stopped out for less money with more reward on that side. If you're using a one-to-one trade, which is setting up 300 to $300 take profit zone, which is all you really need on profit for the day to achieve your goals in the limit. So if you want to set that 3 by 3, we have no problem with that. If you want to be moving tighter on that with the trailing stop, and the trailing stop will be set more or less help you on that. We're looking for more than one-to-one trade on it with protection trade moving up with the market if it does move up and then hit targets. So the trade for today was, we entered aggressively, a bit aggressively. We saw structure, so we entered on structure. So the trade would have been this here, as we said. This is the trade review. Alright, so the trade review showed us we wanted to sell 26.86 this morning for a test of the 0.5 deviation with high node structure. And we were within the band, just touch off the band at approximately 5 a.m. this morning, which none of us would be waking for, and we don't want to set limit orders in case the world fall apart overnight. So you would see 6 a.m. the high was created. There was no retest of the high. Volume particularly sucked this morning. There isn't volume, so if you want to look at volume, what we use as our volume indicator is volume. Look at volume on the open from today, the volume on Friday, the volume on Thursday, and the volume on Wednesday. So you can see the difference on why we would not have executed any trades at that point, because that's one of the prerequisites for entering a trade, that you have enough volume to back it up. You can see volume suffered all day and then spiked right at 3:45, which is the closing the closing of the market. So alright, so I hope you guys understand what the settings are and how we're looking to achieve it. Have safer entries and more profitable entries on the market. The aggressive nature of the market, will be looking for midpoints of the band in the 0.5 deviation area, and the midpoint or top of the band on the 1 deviation area as we trade in setups and look for structure and movement as to qualify we enter in the trade or take in the trade. As you know, we're trying to automate 90% of this, which will only be seen as signal and buying and selling, putting a working order in, and more or less trying to get a set and forget. Okay guys, I hope you appreciate the video and make the appropriate changes to your chart and setup. Okay, bye.